Warren Buffett's Berkshire Hathaway owns just 3 bank stocks in their entire portfolio. Ally Bank is one of them, but not for the reasons that you might think. We're analyzing Ally Financial, stock ticker ALLY, to see if its market price is a fair value. We're using the 10 Towers banking analysis to look at the most telling financial metrics before estimating an intrinsic value for Ally. Then we're giving a final rating to the business. There will be 2 key bonus metrics along the way that just might be the tipping points when analyzing Ally Financial for your portfolio. Before getting into these valuable metrics, let's understand Ally Financial stock performance. Right now, Ally trades for $26.62 per share. In the last year, their stock price has been crushed. They're down 35%. Right now, Ally pays a 4.56% dividend yield, which is in addition to these returns. In the last 5 years, Ally's stock price is up 3% overall. The company is up nearly double from their lows in 2020. And in the last 9 years since Ally's been a public company since its restructuring in the global financial crisis, Ally's stock price is down 6% overall. Total returns to shareholders are positive due to their dividends over this time. Ally trades just $4 above their 52-week low. The company is down $18 from their 52-week high. 5.5% of their shares are sold short, and Ally is down to a $7.9 billion market cap amid the regional banking crisis. But the burning question is, why is Ally Financial in Berkshire Hathaway's stock portfolio? Ally Financial is a diversified firm that services automotive dealers and their retail customers. The company operates as a financial holding company and a bank holding company. Its banking subsidiary, Ally Bank, caters to the direct banking market through internet, mobile, and mail. The company reports 4 business segments, including automotive finance operations, insurance operations, mortgage finance operations, and corporate finance operations. The company was formerly known as GMAC, General Motors Acceptance Corporation, and was restructured during the global financial crisis. The company traces its roots all the way back to 1919 and is based in Detroit, Michigan. Ally Financial is one of the largest position in Norbert Lou's U.S.-listed stock portfolio. Norbert Lou may be a modern-day Charlie Munger, and Joel Greenblatt called him one of the best investors he knows. So it's interesting to see that Berkshire and Norbert Lou are agreeing on the same Ally position here. Starting with tower number 1, we want Ally's average PE in their last 5 years to be below 12.5. This would be in line with the historical average for banks. Ally's PE traded all over the place. They hit a low of just 2.5 times earnings in spring of 2020. Then they bounced to a high of 20 times earnings by the start of 2021. Right now, they trade for 6.5 times earnings. And over this time, they trade for about 8 times earnings on average. This is well within the range of what we'd be looking for the business. This is a check on tower number 1. Tower number 2, we want their average returns on equity to be above 9% in the last 5 years. Ally's return on equity has fluctuated, especially post-2020, as the price of used cars, which is Ally's main source of lending, has significantly increased. Ally earned respectable returns on equity in all 5 of these years. Averaged out over this time, Ally earns about 12% returns on equity in a given year. This is above that benchmark, and this is a check on tower number 2. Tower number 3, we're looking for revenue growth for Ally, including their last 12 months worth of numbers. During this time, Ally's revenues are up 29%. They've grown their revenues from $6 billion in 2018 to more than $8 billion today. This is a check on tower number 3. Tower number 4, we're looking for 5-year net income growth, including today. Ally's net incomes are slightly up over this time. They ended their fiscal 2022 with $1.7 billion in earnings. In their last 12 months, they've earned about $1.3 billion, meaning their net incomes are up 9%. This is another check on tower number 4. Earnings are the main way that a bank gets valued. In the last 5 years, Ally earns about $1.77 billion in an average year. We'll come back to that when we estimate a fair value for Ally, but put that in the bank for now. Another check here on tower number 4 means we're perfect so far for Ally. Tower number 5, we're looking for deposit growth in the last 5 years. Ally has strongly grown their deposits from $106 billion in 2018 to more than $154 billion today. They ended their most recent fiscal year with $152 billion in deposits. This is another check on tower number 5. Big deposit growth like this can be a double-edged sword for a bank. Ally got into its own share of troubles due to this deposit growth. They reinvested their deposits in long-dated, low-yield treasuries, just like some of the other banks that have recently failed, including Silicon Valley and First Republic. However, Ally did not have these loans as part of their held-to-maturity portfolio. They kept these as available for sale, so some of these losses have already been recognized by Ally and are being reflected in their financial statements. Again, this can be a double-edged sword for banks. Big growth in deposits must be invested prudently for it to make a lot of sense for a bank. Tower number 6, we get to see where Ally really shines. Here we're looking for decreasing shares outstanding. Ally has reduced their share count from 427 million shares outstanding in 2018. They ended their most recent fiscal year with 318 million shares outstanding. Right now, they only have 310 million shares outstanding. Ally has bought back 27.5% of their company in the last 5 years alone. These are huge buybacks, meaning Ally is an uber cannibal. This is a monster check on tower number 6. Between their dividends and share buybacks, Ally's been returning a ton of capital to shareholders. Principally, this may be one of the main reasons someone at Berkshire is interested in the business. Given the size of the Ally position, it may be either Ted Weschler or Todd Combs. Both of them are experienced financial investors, and it seems they have a penchant for companies buying back their own shares, which fits Ally very nicely. Tower number 7, we want their interest on deposits as a percentage of total deposits to be decreasing. With recent rate increases, this may not be the case. We still want to check though, given Ally's high deposit growth. In 2018, interest on deposits were 3.4% of total deposits. With their deposit growth, this has outpaced their interest payments. Right now, Ally's interest on deposits make up 2.5% of their total deposits. So this is down, exactly what we're looking for. Another check on tower number 7. We're still perfect through 7 towers. Tower number 8, we want their non-interest expenses on deposits to be decreasing in the last 5 years. This is a more conservative way of calculating a bank's efficiency ratio. Instead of looking at per dollar of revenue, we're looking at per deposit dollar. In 2018, Ally's non-interest expenses made up 4% of total deposits. This has decreased as Ally's become more efficient. Right now, non-interest expenses make up 3.7% of total deposits. Another check here on tower number 8. Tower number 9, we want their institutional funding as a percentage of total deposits to be decreasing and as close to zero as possible. This is a key safety metric for a bank. It's easier for institutional deposits to leave a bank, and it can expose the company to more counterparty risk. Institutional deposits made up nearly 20% of Ally's total deposit base in 2018. Ally has cleared out all of their institutional deposits, and they don't have any today. This is a check on tower number 9. Something also to be aware of, Ally has changed their principal source of funding from relying on capital markets to now primarily being funded by their deposits. Ally's long-term debt position over this time has decreased significantly. Before we figure out a price for Ally, it's time for our first bonus. As bonus number 1, we're looking at Ally's dividend profile. Right now, Ally pays a 4.56% dividend yield. This is huge compared to the dividend yield of an S&P 500 ETF. However, people make mistakes all the time by blindly chasing dividends. Given Ally is a financial company, we want their dividends to be supported by their earnings. That's been the case in all 5 of these years. Ally has both grown their earnings and they've grown their dividend payouts while maintaining a reasonable dividend payout ratio in all 5 years. While this is a snapshot of their last 5 years of performance and it's no guarantee for the future, Ally's dividend is easily supported by their earnings today and has been in their last 5 years. The big tower of them all, tower number 10, we want Ally's market cap to be below their average 5-year earnings multiplied by 10. If this is the case, this may tell us a reasonable fair value for Ally. Right now, Ally trades for a market cap of $7.9 billion. In the last 5 years, Ally's traded for an average market cap of about $12 billion. They traded as low as $4.4 billion and as high as $20.8 billion. In the last 5 years, Ally produces $1.77 billion in earnings in a given year. When that's multiplied by 10, that comes out to $17.7 billion. That's almost $9 billion above their current market cap, and that's over $5.5 billion above their average market cap throughout this time. This is a big check on tower number 10. Keep in mind, this is not financial advice. There's a final bonus metric you don't want to miss. It's a huge red flag and safety metric for a bank, and one of the ways you could have spotted Silicon Valley Bank or First Republic before their failures. Will it apply to Ally? As our bonus, we want Ally's 10-year median returns on equity to be greater than their 10-year CAGR on their earning assets. We don't want a bank's balance sheet to be growing faster than their ability to make money, especially because a bank's balance sheet is inverted, with their deposits being their liabilities and the loans they make out to other companies being their assets. Ally earned 10-year median returns on equity of 8.5%. Their earning assets grew at 3.3% during this time, which is well covered by their returns. This is a check on our bonus. One thing to be mindful of though is their deposits have grown faster than their returns on equity. Their deposits have a 10-year CAGR of 12.3%, which is something to look out for. Ally has pretty significant exposure to automotive lending, especially used car lending. Ally is one of the principal financiers at many GM and Chrysler dealerships and plays a big role in used car financing, although on average they generally tend to stay above subprime lending. Looking at the chart of their returns on equity, the company had a very rough time to say the least during the global financial crisis. GMAC went into receivership with the US government and was restructured into Ally Financial and Ally Bank during that time, with the government owning quite a bit of the preferred shares of Ally. Since then, Ally has paid off their preferred and has come out as one of the healthier, systemically important financial institutions with leading digital-only platforms. With that bit of history, now it's time for our final rating of Ally. In analyzing Ally Financial, stock ticker ALLY, Ally's the first bank to go 10 for 10 on our 10 Towers banking analysis. It's worth reiterating this analysis is not financial advice. It's not a buy or sell recommendation of any security. Before making any investment decision, consult with your financial advisor. The company looks strong and potentially cheap based off of that. They've supported a growing dividend and have returned a huge amount of capital to shareholders in the last 5 years alone. While they haven't cleanly escaped some of the banking mistakes that have hurt other regional banks, Ally doesn't have the same exposure to held to maturity securities. We noted their automotive lending exposure and their mortgage exposure. Other thing to note is their deposits grew faster than their returns on equity. With Ally being a position in both Warren Buffett's Berkshire Hathaway public stock portfolio and Norbert Liu's stock portfolio, combining the factors of our analysis, Ally looks like an exceptionally attractive business for further research. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to look at next time. Thanks for learning about Ally with me, and have a great day.